So the banks are not to blame for the housing crash. Let's have a look. Good morning everyone and welcome to this episode of Hartzer Says. I've got my stein of coffee and I hope you're all ready for a good weekend. So let's have a look at this article from the Australian Financial Review. Westpac CEO Brian Hartzer says banks not to blame for the housing slump or the housing crash. Now, I did a video about Westpac 2 years ago now, one of the early videos I did, and I'll put a title card to it here. And go have a look, because I look at Westpac's claims of achieving gender parity within their management structure, but they just fudged some terms. They reclassified people in certain positions. So that just shows you a bit of background about what Westpac are like. So CEO Chief Executive Brian Hartzer has rejected doom and gloom claims that the big banks are worsening the housing price slump by cutting off credit amid the glare of the Royal Commission. Okay, now I'm going to just remind you all and add a card again to a video I did yesterday about 40% of the land in Victoria that has come back onto the market because of people having to abandon their housing dreams because their finance was cut off by the banks. Okay? So I'll put that right up here. Or maybe before, you may have already clicked on it. So, but he warns that one of the unintended consequences of the regulatory crackdown on residential lending has been to penalise small businesses which rely on their home as security. He cautions that Labor's proposed tightening of tax breaks for negatively geared property has given investors further reason to pause, particularly in the lead up to the election. Now, as an anecdote, some of you have been watching my channel for the last few days or last month or so would have realized that I've shared that I'm looking at property with my mother. We're down the Gold Coast, we're looking at a whole lot of different things, and I'm talking to agents and real estate agents about just, how's it going? Are contracts falling through? And they're going, yeah, contracts are falling through. It's hard to get people to put offers on. We've got another family member that's selling a property, and they've got lots of interest, people coming through, but no offers. And it's a beautiful property on the water, but they're saying, no, we'll wait till the election. We'll wait to the election. So, I would agree with this statement here. Good old Brian, you're right. It is concerning for people, regardless of the outcome, regardless of your position. People are just going to wait. And he warns that stricter supervision of banks risks spilling the excess demand to shadow banks with riskier lending standards. Could be true. But, that's the age-old argument. Prime Minister Scott Morrison and Treasurer Josh Frydenberg have urged the banks to keep credit flowing to a softening housing market during an unofficial election campaign, as concerns mount that lending may be curtailing in the fallout of the Banking Royal Commission report, with the report to be released on Monday. Increased scrutiny by lenders on borrowers' capacity has slowed loan approvals and intensified weakness in property prices, where median prices fell by 9.5% in Sydney in 2018 and 8.2% in Melbourne. Now, that may not sound like a lot, but think about it. Nearly 10%. If you've got $1 million property and your perceived wealth has dropped by $100,000, that's going to have an effect on you. We want to lend, but Mr. Hartzer said the falls needed to be seen in the context of a 75% jump in Sydney prices between 2011 and 2017. 75, I had no idea it was that much in 6 years' time. Actually, I'm going to zoom a bit here. I had no idea. That is insane. So all these superstars on LinkedIn that are advertising their property genius, it's bullshit. They were just riding a wave. It's like anyone riding a crypto climb, pump, going, I'm a genius. Yeah, sure. And at 55% in Melbourne prices over the same period. Wow, that's nuts. As to the perception that the Royal Commission has made banks scared to lend, for Westpac this is simply not the case. Mr. Hartzer writes in the opinion section of the Australian Financial Review. Well, yes, it's true. The banks love the Royal Commission because it has pretty much restricted how much they have to pay to the mortgage broking industry. Now, I was talking to a colleague of mine who's a broker, and he was saying that originally they were paid, a big chunk of, a commission when they brought in a client back in the day. And then the banks pushed for the trailing commission, so they'd only have to pay a portion of the money now and then pay the rest over a period of time. Now, they've done similar things where they've gotten rid of the trailing commission in the UK and other places. And what would happen is you'd have like a two-year period, and your mortgage broker would ring you up again and go, oh, I can get you another deal for your loan. I can save you a little bit of interest. Let's re-sign. So the mortgage broker will re-sign you up to a loan, maybe with your same bank or another bank. They'd get another little commission, because this is the remove the trailing commission. You'd be happy because you'd knock 0.5% off your interest rate, and the bank's happy because they've kept you. So what's also started happening is the banks now offer the brokers going, we'll pay you a bonus if you keep this person with us. So, I don't think the removal of the trailing commissions is going to be the death knell of the broking industry. But the idea of having people pay individuals, let me know in the comments, would you pay upfront money to a broker to find you a deal? How many people will pay that? No. No one will. We're all cheap bastards, or every one of us. You just go to the bank and get them to do it for it, and you'd have less competition then. So I don't think it's in the best interest of the consumer. I really don't. And this is just from advice from a colleague. If there are any brokers out there, let me know what you think. I'd be interested. I want to read through the results of the Royal Commission, because that's what I do for my hobby now. I drink coffee and read Royal Commission and judgment. Yep, that's what you do on YouTube. Maybe I should play some Fortnite, guys. So let's be clear. No, I'd never do that. Let's be clear. We want to lend, and we have enough capital and funding to ensure we continue to meet the borrowing needs of consumers, small businesses, and commercial enterprises, even in a downturn. For Westpac, the recent decline in credit growth was due entirely to a reduction in new applications. Average approved loan sizes actually increased slightly, while our approval rates remained unchanged. What does that tell you about consumer confidence? I'd be arguing it's heading down. In essence, our risk appetite hasn't changed. There are just fewer people walking through the door. I'd be interested to see a bit more argument behind that, because all the stories I've been hearing from agents, from developers, tells me something a bit different. Harder for SMEs to meet new rules. But Mr. Hartzer said the increase in scrutiny of customers' expenses and incomes, plus the building of additional buffers into loan serviceability calculations, has added to the time and cost of getting a loan. He said automation would reduce this burden for borrowers over time, but there was a concern that the increased administrative burden could hit credit for small and medium businesses, which typically use property to secure their business loans. As a small business owner, it is insane just how hard it is to get a mortgage, to get a loan. It's harder for me. I remember this. It's harder for me to get a mortgage, my wife and I, as a small business, than for our staff. Okay? We ran the business. We knew all the finances. It was easier for the staff to get it than for us. But that's the way it is. One unintended consequence of these changes has been to penalize small businesses where more complex cash flow and expenses have made it harder to meet the increasing data requirements, given many loans are secured by residential properties. Well, yes, when you're in a small business, cash flow is king, and it can be a nightmare. It really can. It's tough when, every month you've got to pay those bills. You've got to keep that money flowing in. But then, a big client just won't pay you for 90 days. And if you look at photos of me and my wife when we started our business to 5 years after, there's a reason why my hair's all gone white. I was already bald in high school, so I can't blame that on it. So back to the article. We've raised this issue with the regulators and government and are working to find a solution. Sure you have. Apparently the bubble isn't bursting, guys. Okay? We can all be safe. The bubble isn't bursting. Westpac says so, even though the bank that lies for their gender, feminism quotas, but whatever. Banks raised rates to price out aspiring homeowners, a move that also delivered the banks with another $1.1 billion in profits and has attracted the attention of the ACCC and the Productivity Commission. Mr. Hartzer praised the Australian Prudential Regulation Authority for intervening in the housing market in 2015 and 2017 with caps on investor loan growth and interest-only loans. On Tuesday, APRA rejected claims that the caps delivered a profit windfall to the big banks and failed to consider the impact on smaller lenders. Mr. Hartzer joined the regulator in defending the strategy, saying he believed that history would show the actions were well thought through, well implemented, and highly effective. Let's wait and see. He described the bank's interest rate increases as reducing the attractiveness of investment property relative to other investments, which also allowed first home buyers to increase their relative purchasing power. Sure. So, increasing interest rates helped first home buyers, did it? What do you think, guys? Let me know your opinion of that in the comments. Oh boy. My view is that the housing market remains fundamentally sound, and overall the adjustments are nothing to be alarmed about. Mr. Hartzer said uncertainty around potential taxation changes relating to residential property was weighing on demand for property investors, as while buyers were putting off decisions to buy, upgrade, or invest until after the election. Some of the weakness in East Coast cities reflected an oversupply in the apartment market. That's true. I agree. That's definitely true. I've seen that here in Brisbane. But it's important to note that it is normal and indeed healthy for the economy, for the housing price cycle to slow after the 6 strong years of growth to 2017, he said. What we're seeing is an orderly adjustment, not the bursting of a bubble, that to date regulators and banks are managing reasonably well. Sure you are, guys. I don't think it's actually happened yet. I don't think we'll see it until the results of the election. I'll be interested to see what happens in this election. I really will. Just looking at all the people who are saying they won't vote for Morrison because of the video about Milo being banned, which apparently now he's getting his visa. So that's good. I'll have to do a look at that later on today. So you never know. It could go either way. At least it'll be an interesting election. So shadow banks the winners. He also warned that some of the excess demand could head to lenders with looser lending standards, which posed further risks. Greater scrutiny of APRA-regulated lenders, particularly the majors, has resulted in smaller banks and non-banks growing fast, a trend that could warrant attention if an increased proportion of loans were being written, at less stringent lending standards. Westpac and its rivals are bracing for the release of the Commission's Haynes final report and recommendations for the sector to be handed to the government on Friday and released to the public late Monday afternoon. The federal government has already indicated that it will do its utmost to spare smaller lenders and mortgage brokers from being disproportionately hindered by the recommendations. The banks and mortgage brokers were found wanting in their provision of consumer credit during the Royal Commission, and widespread and regular failures to adhere to responsible lending practices were revealed. Banks were also acutely aware of how upfront and trailing commissions paid to mortgage brokers were leading to poor outcomes, but did nothing to resolve the problem. Okay, sure you did. I don't think trailing commissions are leading to poor outcomes. I think greed is leading to poor outcomes. While Westpac emerged from the hearing in relatively better shape than its rivals, it was exposed for deep-seated issues in its financial advice arm, including rogue financial planners and a ballooning fee-for-no-service compensation bill. Fee-for-no-service. Wow, how do we get in on this game, guys? How do we get in on this? Fee-for-no-service. The bank's reputation, however, has taken a number of hits outside the Royal Commission, from protracted courtrooms hearings over alleged rate rigging and irresponsible lending. And this was written by James Frost, and he's based in Melbourne. And apparently he is a line drawing person. So good work, James. I like this article. It's interesting to see where it will go. What do you guys think? Do you trust the banks? Yeah, it seems to ignore what we read yesterday about land in Melbourne. Maybe it's just that type of property. Maybe why would they give you pre-approval and then all of a sudden it changes if their risk policy didn't change? It can't just all be the broker's fault, can it? Guys, let me know what you think. Where do you think this is headed? I want to keep an eye on this. I think this is going to be, the housing sector, property prices. It's going to have a huge impact on the coming election. Psychologically, it'll have an impact on everyone's day-to-day decisions, and then that will flow through to the entire economy. If you're worried about a coming recession, if you're worried about property prices going down, you're going to hold off on buying. I mean, I'm telling my mother, go and slow down. We don't need to rush into anything now. Take a bit longer. Take a bit longer. If we put offers in, we put them in a lot cheaper. And they're all going, oh, but properties were selling for this much more in this area. And I go, yeah, that was 5 years ago. We don't, she sold a house. She doesn't need financing. Just wait till you have a few people dropping through and then call me again. But we'll see. We'll see how that strategy goes. I'll let you know. But yeah, it's going to be interesting seeing the outcome of the election and keeping a handle on this. So guys, please let me know what you think. If you like my content, please share it around, help build the channel. Like, share, and subscribe. Ding the bell so you see my daily updates. And in March, I'm trying to do 2 videos a day, a morning video and a night video. Let's see if I can keep it up. Guys, take care. Have a lovely day and enjoy your Saturday. Bye for now.